How's it going, everyone? It is Wednesday, May 1st, 2024. First video of the new month, and just as a recap, I'm gonna go over all of the April trades, and we'll take a look at the stats for April. At a quick glance, looks like we're doing pretty decently. Some good amount of wins, a couple of losses, a couple of no trades, and a few scratches. But overall, April not looking too bad. So the pick of yesterday's video was NCLH. We took the $19 earnings time spread for a 10-cent debit, and I was actually able to partially get out of the spread earlier on the same day for a 30% gain, and then I took a 40% gain on the open. As you can see, the stock, you would have to get the profits on the open, or else the stock would tank. So stock is very, very bearish, but on the first 30 seconds, first 10-15 seconds, I got my fill. The bid-ask spreads on the open in terms of options are very, very wide, and then they'll start to tighten out later in the day. So if I look at what that spread is trading right now that's at a 2-cent credit, so you would have had to take your lumps at this juncture. If you're unsure what to do in terms of the spread goes too low or the spread goes above the range, you should read up on that in the wiki and make sure you know what to do in all the scenarios. But here we took a nice 35% win on this stock and had a nice gain. The only position we're on right now is on. We'll take a look at on over here. And as you can see, it is coming down a little bit here, breaking through some of this horizontal support and also testing the 100 SMA, which is right above our, kind of right at our short strike price. So again, we're keeping an eye on. I'm not super worried about it right now for two reasons. First, we got this poke here earlier, and then we got back into the range. The second thing is that we have a good amount of high volume support coming into play. You can see how this is a pretty high volume candle. There's some high volume candles over here, and it also lines up pretty well with the 100 SMA. So we certainly have some support here. It's going to depend on what the market does on the FOMC statement. So the good thing is you should not be in a lot of positions. I can manage on because it's really only the one position I have to worry about going into this statement. That's pretty passive. We also have time on this position, like I mentioned in prior videos. So even if it dips below our long put, we have time for it to come back in if the market kind of retests the SMA and then starts to take off. And we're going to get to the market in a second. But just keep an eye on. We are good right now. We don't have to worry about any assignment risk. And we'll have the information this week to decide how we want to proceed with the spread. If we want to stay in it, if we want to close it early, or if we need to leg out of it. Okay, so let's look at what the market is doing right now. So my long-term fundamental market bias is still a 1, as I mentioned in the prior videos. We are going to see what happens today. We had ADP come out today. We have Jolts coming out as well in the morning. And those are going to be important, obviously. And you can see how we had some volume spikes here. Here's the reaction to Jolts. If you look at the extended hours, you can probably see the, where's the 830 bar here? Yep, here's our 830 bar. Here's our reaction to the ADP numbers, which was a positive reaction until the open. So some minor sources of news, and together with the unemployment report, they'll sort of paint the story of what is the market doing, or how is really the economy doing. Those are sort of the main data points here. One thing I've found pretty useful in understanding all of these that I'll share, and I'm going to go into this source right here. is I've been trying to just kind of understand some of the fundamental market backdrop here, and I found this source in JPM to be pretty helpful. So as you guys know, JPM, biggest global bank in the world, massively important, and obviously they conduct extensive fundamental analysis. I don't have to be a pro, right? I don't have to be doing this myself, but they have a whole Q2 market update highlighting major themes and concerns impacting investors and clients. And here's some guide slides here. So you can download the slides. I'm not going to go through all of them, but you can see here how, okay, here's how they feel about their soft landing concerns. Here's how they feel about unemployment and why, immigration and strong labor supply is making a factor, why inflation should come down to 2, other opportunities outside tech, Fed easing, global growth. So I thought this was a really helpful idea, or a really helpful tool in just understanding kind of just what's going on fundamentally. And to take a step back here, the reason we do the fundamental analysis, in my opinion, is to kind of get in the heads of asset managers, right? We're trading relative strength and relative weakness, which means we're identifying institutional order flow. Now, we don't decide, right, what is fair value or really what the rates are going to be. The institutions have their expectations, and those expectations get funneled into price. So if I know kind of what's happening fundamentally, it could give some clue as to what institutions are thinking. And the tricky part is that we don't want to overly rely on this. We really want to have the technicals guide the way, but the fundamentals can set the tables for what the technicals should be and what we could expect potentially from the technicals. We don't trade the fundamentals, they just have us set our plans accordingly. But in any case, I thought this was very helpful. I might read through the whole deck later. And if you're still kind of unsure about your fundamental analysis or kind of how to conduct it, again, I'm still learning this kind of stuff. But I'll check out this slide and try to match it with what Pete has in his system. And if you haven't read the system, just read it. Take the 2-week free trial, read the system. If you read anything, just read the market stuff. That is the biggest piece of the puzzle and the toughest thing to really grasp, in my opinion. So that's what I wanted to share. But essentially, with my fundamental bias, we're going to see what the FOMC statement comes out to be. We're going to see what the reaction is like. And we are going to see also what happens with unemployment and Apple earnings tomorrow and on Friday. Now, long-term technical, we had this rally, we're in the pullback phase, and this should be the move up. This really should be the move up. But I didn't like this red candle yesterday. I would have rather see the market hold some of the gains and kind of compress into the FOMC, right? And that's really what I expected. And instead, what we got was a pretty big bearish trend day, filled in the gap, and then some. So what it tells me is that, look, I would not be as bullish as I was on this candle. This makes me go back to the sidelines because I thought buyers would have a better control. And what it's telling me is that, sellers knocking it down, sellers knocking it down. We're not quite getting a move like this, what we wanted. It's looking more like this, and that is not a very strong move. Our short-term technical bias right now is going to be a 0 at this point. I am pretty unsure what the market's going to do at this juncture. And I have a feeling that we could retest this 100 SMA. I mentioned in this video, I think on the 22nd, maybe the 22nd or the 23rd, that it was strange that the market didn't test the 100-day SMA. Usually it has that test. And I'd kind of given a parallel back to what David mentioned early October, that we didn't test the 200 SMA and we rallied and then couldn't get anything going. And then we actually tested the 200 SMA. So that could be one of the things that happens now. But FOMC is our binary event. Bearish reaction, we're going to test it. Bullish reaction, we're going to not really going to do much with it. So let's zoom into our shorter term market bias, which is a 0. So yesterday what happened was we got this gap down, still in this range, and you can see I've been drawing a lot of channels here, just working on constructing the trend. We were in this bearish channel, got a couple of pokes, got anything going, then we broke down through this bearish channel. When we get this breakdown of a new channel to a new extreme, we form a new channel. So we broke down this bearish channel, and we formed a new bearish channel that had a stronger trend. And you can see that we had these strong moves down, compressed for an hour, drop down, test, and then another leg lower. Can't get anything going, and then we got this pretty big sell-off at the end of the day from 505 all the way to 502. So we lost $3 in those last 10 minutes. Really wasn't that bearish until then. It was sort of a weak bearish trend day. Today we had a small gap down, tested, I believe, the overnight lows. Yep. So we tested some of these overnight lows, found some support around the $500 level, and we're just kind of chopping around. There's a slight bearish bias to it. We have a higher low over here, and we have a about the same low of the day at this point. So slight bearish bias, but it's going to be low volume and low trading activity until the FOMC statement comes. So we really have to game plan around what are the outcomes that could happen. And for me to do that, I'm going to go back to the daily chart because that's really kind of the story for today. So we know there's three things that are going to happen. It's going to be either very bullish, it's going to be very bearish, or it's going to be pretty much a dud. Now, if we get a bearish reaction, I'm expecting a break through the 100 SMA. We're in striking distance of that. If I put up the average true range, you can see how our average true range has gone up tremendously since what it was earlier. It was around $4, and now it's gone up all the way to around $6. So we are about a 1 ATR move away from this 100 SMA. And if we get a bearish reaction, I would look for a break of that level to get short. And ideally, I would also like to get below this low from April 19th. That would be another nice little test at that point. On the neutral side, we kind of waffle around, and that's, to me, that's actually sort of the worst scenario because it doesn't give us any sense of direction. I don't care if we're long or short at this point. I just want a direction and a trend that I can trade with. So if we waffle around, it just tells us that, hey, this isn't as important. Maybe they just didn't give us any real guidance. And we're going to have to wait for Apple earnings and unemployment to give us maybe a sense of direction and let the dust settle down. The bullish reaction, I think, would be a nice bullish engulfing candle that would get us back to this level. If we get that, then I could see some follow through where we get a nice bullish engulfing candle, gap up above the 50 SMA, AVWAP-Q, and then hold the gains. If we get that scenario, I would be bullish, and I'd probably start taking some in the money calls, some short swings, maybe not some long swings, but some short-term swing scalps, essentially. So those are the three options. So given those three options, I'm going to give three different kinds of picks. So my first pick is that one you can take regardless, and this is going to be another earnings time spread. You can see that we're taking advantage of this for two reasons. One, there is not a lot of directionality in the market. This is kind of a choppy, weird point. Either there are some nice day trading opportunities, but earnings time spreads are non-directional. So we are in the middle of earnings seasons and we can take advantage of some nice opportunities. So I'm going to recommend Penn as my earnings time spread. It's a little bit cheaper than I would have liked. I preferably like closer to $20, but very rarely exceeds earnings. The expected move is 16. The average move is about 9. And the difference is very high. We have a difference of 0.68. So this is a very nice opportunity. I'm not sure why it's priced as high. I don't know as much, but I also see that MGM is posting today, and these are both casinos. So my guess is it could have something to do with the casino stocks. So if we take a look, here is Penn on the chart. Quite a bearish trend, and it was pretty weak the last couple of times. Again, it's pricing a 16% move. So that's something like a $2 move either way. As long as we're in that range, we're usually good. The average time of that move is 9%. You could say maybe $1.50. If I did that right. Yeah, $1.50. So this is probably closer to more like $2.50, I'd say, in the expected move. So as long as it stays in that range, we can get a nice profit. It's going to be a Thursday, so we can also benefit from some additional time decay. Now with Penn, I would not take this time spread until after the FOMC statement. So what we're going to do is, depending on what the price is, we'll sell the at the money options. So if I sell the 1650 calls right now, and I buy the 1650 calls next week, we're looking at about a 16-cent debit. So we'll see how that goes. 16-cent debit. I would target maybe a 40 to 50% win on this kind of spread. And that should be a pretty nice trade. So that is our pick, regardless of what happens in the market. Now, my bearish pick is going to be Target. And this is why I like Target a lot. So we had this gap up earlier. We tried to test this high. We got a pretty strong rejection. Now we've broken through the SMA. We're below our AVWAP-E. We're into the gap, and we've rejected off this bearish channel. So Target is a very nice trade, and we have great opportunity over here. This lines up pretty well with the 50 SMA, and so does the bottom of the channel, with the 50 SMA coming in right at about 154. So we got $4 of room on this stock. We have some time before earnings. So if the market is bearish, I do like Target. I'd probably take maybe a PDS on Target. So let's just see what the options are going to be. Again, it's going to depend on what the price is going to look like on the FOMC statement. Target has nice ones. So let's look at the ones for this week. You could probably buy the 157, 155 puts. That's a pretty nice debit. That'll get us to about here. You can also get a little bit closer, maybe the 152 puts if you really wanted to. So that's let's see, a $5 spread. You can get that for $1 of debit. So pretty nice. If you're a little bit more conservative, maybe you want to give it another week, you can do the 157, 152. That's going a little bit more expensive, about $1.40, but still a very, very nice price. And if you want to get a really wide spread, you can also do that as well. The 160s are pretty much at the money right here. You can still get a very nice debit on that. So again, see what the strike price is. With the call debit spreads, I don't give a hard recommendation. It really depends on how you want to have a move pretty quickly. So I'm not going to say take the May 17th ones, but if it's closer to the end of the week, I tend to prefer the ones that can come up on May 10th or the next weeks, just because I don't feel like I'm pressed for time. All right. So that is my long pick if the market has a bearish reaction, or sorry, my short pick. My long pick, and this is subject to change, is J&J. And this is a bit of an interesting long pick, so let me explain. First, you can see that we had this earnings reaction. We came down, we had this double low, and now we're rallying up on a pretty nice bearish engulfing candle. We had a gap and go day, sorry, an HA reversal candle. So this is a bullish reversal on the D1, and J&J definitely has some room until the $154 level. It's gaining some relative strength, and ATR is expanding. So the main thing here is the news. There is some settlement with its lawsuits, its cancer lawsuits. I don't really know, but there's news driving this market. That's what caused it to change, and that news was probably what was weighing the stock down in this area over here. That would be my guess. So I like J&J as a D1 reversal. Again, I think you could take a CDS on this trade. One thing that I will check quickly is if there are any more healthcare earnings. And a quick way that I like to check is I have these watch lists that have sectors, and I have info, I have a template for info, which gives me all sort of the many earnings coming up. So I say, okay, actually, well, you know, there's Amgen and then there's Illumina coming in the way. So, you know, that could maybe affect what's happening with J&J, which is actually not on this list. So let me add this guy. Yeah, so Amgen could have some reaction over here. And let's do a quick check, right? We'll see how Amgen actually affects J&J earnings. So here's Amgen earnings after the close that day. So here's Feb 7th. Let's look at J&J on Feb 7th. Did it react to it at all? All right, so Feb 7th, Feb 7th, Feb 7th. Okay, Feb 7th, you know, didn't really move it too much. Didn't really move it too much. So let's check one more time here. Amgen, so that was a big reaction over here. Earnings before the open, October 31st. Let's check J&J on October 31st. October 31st. Yeah, I mean, didn't react to it too much. So I'm feeling pretty good now about J&J. I don't think I'll react too much over here. Illumina is a different industry, so I don't think it's going to have as much crossover impact. Really choppy stock here. You can check again Feb 8th on Illumina. You can check the Feb 8th candle on J&J. Feb 8th. Yeah, getting out a little bit, but it's really hard to say if that's really from the earnings or just the price action that's sort of actually happening. So I like J&J, and I think even this news given the lawsuit could override some of that earnings reaction. You can see we had this big gap up, and we're just seeing strong buying throughout the day. Probably a pretty decent day trading setup as well. We're getting a little bit of an HA reversal. So J&J is my long for this video. If the market has a bullish reaction, I want to see it get back in the gap. I want to see it erase some of this long engulfing candle. All right, that is it for today's video. Those are the picks for today. Hope you guys find this helpful. Trade well for the FOMC. Don't have to take too much, and I will catch you all in the next video.